Hi, my name is Vlad and I'm with Tradespoon, and today I'd like to talk about inflow of capital into equity funds. Stock market has staged an impressive rally in the past 12 months, and S&P just broke 1750 level, which is, if you look at the weekly chart, it's a multi-year high, and it broke it on above average volume. With federal help in quantitative easing and keeping interest rate low, stock market is continuing to go up. It's very important to look at the credit availability, which helped the corporations to borrow money and hiring more employees. If you look at the last week employment numbers, they beat the expectations. 203,000 people were hired by corporation, which is a good sign for continuing bullish market and for continuing inflow of capital into equity funds. If you looked last week, the new numbers came out, and if you look at how much funds have been allocated into equity funds, you will see that 30% of all the money that inflow into equity funds were allocated in the past 3 months, which is an impressive growth and shows that investors and institutions are confident in the stock market rally, and they are allocating more and more money into equity funds. Investors currently allocating up to 57% of their portfolio into equity funds or mutual funds, and mutual funds have reached a record $178 billion into mutual fund equity funds, and currently individual net worths have reached $77.3 trillion, which is an impressive growth, and it's been for the record high for the past 20 years. So obviously all the signs point to the continued bull market, but one should exercise caution because we are currently reaching overbought conditions that are similar to 97 and similar to 2007, where VIX is at record low and people are allocating more and more money into the equity funds. So doing the research is very important, and the eyes are currently set on Fed meeting next week on December 17th and 18th, and Fed Open Market Committee will decide when to stop quantitative easing and when to start raising interest rate. Right now it's scheduled for March, but with the employment number improvement and stock market rally, one have to be cautious that if the interest rate are going to be raised sooner than the market will undergo 5 to 10% correction. So at this juncture, it's very important to do your homework, and at Tradespoon, where I'm the founder, we do the homework for you. We rank all of the stocks based on their intrinsic value, based on their earnings consistency in the past 5 years, how much revenue growth each company underwent. And then we're looking in the past 4 quarters, have the companies beat the earnings estimates and have they trading below the intrinsic value. So we look at the universe of stocks and we rank them. We only buy in the stocks that are trades below the intrinsic value, have been consistently outperforming analyst estimates for the past 4 quarters, and for the past 5 years they have grown their revenue. So it's very important to do your homework and only buy stocks that have intrinsic value. So if you need any more research or look at our quantitative analysis, you can go to tradespoon.com, and until next week, this is Vlad with Tradespoon. Thank you.